Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, July 30th, 2010. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. In Bermuda, it's 12:30 p.m. and in Mexico City, it's 10:30. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. There is still no word on the mystery surrounding the Japanese supertanker with 2 million gallons of oil that was encountered a bump in the night somewhere off the coast of Oman, the M Star. It's unknown whether it was an explosion, whether it was an attack, whether it was a wave, whether it was an earthquake. These are all causes that have been advanced. The ship is still in a port in Oman, and they're looking at it. Now to our main news. In the Gulf of Mexico, the governor of Louisiana has announced that he has been able to reopen some commercial fishing areas that have been closed due to the big oil spill. The Louisiana Department of Wildlife and Fisheries reopened areas for finfish and shrimp east of the Mississippi River in 3 parishes. Tests by the U.S. Food and Drug Administration found that fish and shrimp in those areas were safe for eating. The reopening of some fishing grounds comes after BP capped a well on July 15th, preventing as much as 60,000 barrels of oils a day from flowing into the ocean. This weekend, the company is going to start pumping mud into the well and may seal it with cement. The National Oceanic and Atmospheric Administration's Fisheries Service closed as much as 37% of the Gulf to commercial fishing after the spill. BP still now needs to confirm the damaged well is plugged by intercepting it at the bottom and inserting additional cement as needed. Lines that will inject mud into the well from the surface are also needed to be connected securely before the sealing process can begin. The total Gulf of Mexico commercial fish and shellfish harvest was about 1.3 billion pounds, worth about $660 million in 2008. So about 40% of that was cut off for a good 2 months during the height of the fishing season. Some bad economic news in the U.S. Growth in the American economy slowed to a 2.4% annual rate in the second quarter. This is less than forecast. It reflects a larger trading deficit and a big-time drop in consumer spending. The increase in GDP compared with the median forecast of 2.6. This was after the upwardly revised pace of 3.7% in Q1. Oddly enough, business investment climbed at the fastest rate in the quarter since 1997. A slower pace of growth, of course, means employers are reluctant to hire workers and more likely to keep a lid on prices in order to boost sales. Broker reporting news coming in, 2 big houses. Jardine Lloyd Thompson in the UK has recorded revenue of about 591 million pounds, or $591 million, or 378 million pounds for the first half. This is up 21% from last year. They also have reported an underlying trading profit of 70 million pounds, up 20%. From the 57 million pounds at this time last year. Pre-tax profit was up 14% to 70 million pounds. Organic growth, and here's the big number for the half, was 6% a year. This is year on year compared to last year. They raised their interim dividend up to 8.8 pence from 8.5 pence. Dominic Burke, the CEO of the company, pictured here, said that trading activity in the first half gives us reason to think it's going to continue for next year. He also had a couple of interesting comments about all the discussion going on about Aon buying JLT or part of JLT. He described it as laughable. He said, "No part of the JLT group is for sale today or under any circumstances that I could conceive." He said that the broker's 5 main business lines, retail, specialty, reinsurance, employee benefits, and the newly formed Thistle insurance units are absolutely core to JLT. He went even further and he said that the persistent rumors are nonsense mongering by 1 or 2 competitors that are disgruntled that they continue to lose people and clients to JLT. He said you'd think they'd have better things to do. Well, in Chicago, they do have better things to do. Aon saw its second quarter net profit grow 3% to $153 million. This is on the back of about a 1% growth in revenue. They did, though, see a 1% decline in organic revenues in Q2. Aon continues to battle against the P&C soft market as well as regular old economic pressures. Still, organic revenue from its broking operations fell 1% as growth in the Americas and the Asian Pacific area was outweighed by reductions in the UK and the EMEA region. Reinsurance broking organic revenue was down 3% in the second quarter, down to $359 million. Aon said this was the result of higher cedent retentions and soft pricing. On the retail broking side, organic revenue was down 1%. For the first half of the year, Aon's risk and insurance broking division produced revenue of $3.1 billion, up 2% on last year, with organic revenue down 2%. We're going to have to look at those numbers a little more closely. If the cedent retentions are up and the pricing is down, I need to make sure we understand them. Stock market in New York is down about 21 points right now. We'll go to a word from our sponsors. White Mountains Insurance Group's second quarter profit plunged as revenue slid and the company paid out more claims than it gained in premiums. Ray Barrett, the chairman and CEO, said, quote, "We had an okay quarter." He said the company did have small gains from investment and underwriting. White Mountains reported a profit of $2.5 million, or 28 cents a share, down from $180 million, or $20.35 a share a year earlier. Analysts from Thomson Reuters, analysts that were polled by Thomson Reuters, had forecast earnings at $4.25 a share. Said they came in at 28 cents a share. That's a big difference. Revenue fell 24% down to $928 million. Earned insurance and reinsurance premiums fell 4.4%. Net investment income dropped 26%. Net written premiums declined 31%. The combined ratio increased from 100% even up to 103%. Here's an interesting story. Think of this the next time you go to a drive-thru of a fast food restaurant. This is about $1 million worth of damage that was caused at a McDonald's restaurant in Vancouver, Washington, after a fire in a vehicle that had been stopped waiting at the drive-thru window spread to the restaurant. Vancouver Fire Department said it's unclear what caused the car fire, and it's also unclear exactly how the flames spread from the car to the McDonald's. An 80-year-old woman was pulled from the car by a man behind her in the drive-by. 12 employees were evacuated. 2 more were treated for smoke inhalation, and the McDonald's burned to the ground. The last McDonald's I was in was brick. I'll have to look at that further.